Futures trading involves substantial risk of loss and may not be suitable for all investors.
Hi again, everybody. Welcome back to Markets on the Move. I'm Marlin Bohling, along with the one and only Oliver Sloup, Blue Line Futures, and there he is with the salute for today. Happy Monday to you. I hope you had a good start to the week. Well, Oliver, how you doing here after the weekend?
I'm doing well. The Huskers are 3-0, so that's a good start, and they've racked up some blowout victories against some maybe not so great teams, but they got a good true test this weekend. So hopefully that optimism can continue forward. I know the optimism in the livestock markets very, very firm today. Did you get a chance to see some of those markets?
I did, and man, oh man, what in the world? Just when you think the party is all over in the cattle market, here it comes roaring back again. So what do you attribute that to?
Yeah, it's wax on, wax off. One day you're a really smart individual. The next day you're something, I don't know what you would describe it. I will let you decide the language, but you can imagine. Friday, sharp sell-off in the cattle complex, and then today it's just like it never even happened. I think a lot of last week's price action was on the back of technical weakness early on in the week. We talked about it, the break and close below trendline support and the 20-day moving averages. We outlined that as kind of the new resistance point to start this week's trade, which is coincidentally kind of where we wound back up, as you can see here on the December live cattle contract, right back towards that purple line and the breakdown point from last week. That's the 20-day moving average. So we're kind of right smack dab at do or die levels, 237.20. Need to see consecutive closes out above there to neutralize some of last week's weakness. If we can't get out above there, potentially we see some additional consolidation or long liquidation. But I think the thing to take away from Friday's trade and today's trade is just these swings. It's so important to manage your risk. I think the average trading range over the last 14 days for live cattle is right around $4.50, and for feeder cattle it's right around $6.50. So again, this is a very, very choppy and volatile market. We continue to like looking at options as a means to play that. And if you can't handle those type of ranges, there's nothing wrong with staying on the sidelines and being more of a spectator.
For our viewers at home, can you explain what's going on with the blue and the red bars, the vertical bars on the bottom of that chart? I'm assuming that's volume, but man, did that increase in the last few trading sessions. What does that mean?
Yeah, a lot of trade activity, especially in this December live cattle contract. As you can see here, December started to really pick up with October kind of inching slowly closer towards delivery. You're going to see that volume shift from October out to December. So when that starts to happen, the volume is where we want to focus a lot of our technical attention on. And for October, that's kind of moving to the wayside, so we're looking a little bit further out the curve. For live cattle, again, that's going to be December. And then for feeder cattle, we like looking out to the November contract, where you can see the volume continuing to grow there as well. And these chart setups really are fairly identical. We're trapped between the 20-day moving average on the top now as resistance and the 50-day as support on the bottom. So I wouldn't be surprised to see the markets largely consolidate within this range until we get new news to either break us out to the upside or downside. My risk, or I guess my caution flag continues to be the risk to the downside. If we do get some additional information with regards to reopening the border with Mexico, not to say that they're going to open it right away, but even just the talk of the steps to getting to that point, I think could potentially lead to additional pressure. Whether that comes, this week, next week, or in a month or two from now is the big question, though, that nobody really knows, and that's why we're, quite frankly, seeing a lot of the volatility that we're seeing.
Are you concerned at all that chart that we're looking at here with the feeder cattle, it kind of appears like it's wanting to set up for a head and shoulders top? I mean, does that worry you much?
It really has for the last couple of weeks. We're about 2.5 weeks removed from contract highs in live cattle and feeder cattle. So we are rounding out, as you can see here, and these old support levels are now going to be significant resistance. I think the bears have the technical advantage so long as prices stay below these levels. If we get back out above here, that certainly neutralizes things. But as you had mentioned, you're starting to see the possible formation of a head and shoulders here. You'd want to see really a break and close below the 50-day moving average to confirm that, and potentially that would be enough to even just kind of reaccelerate some of the selling pressure just based on technicals alone.
Well, they weren't as exciting. I mean, the hogs are still airborne, I guess you would say, hovering right near the top of the chart.
Yeah, hogs are kind of holding their own. Gave back a little bit on Friday, a little bit of weakness today. I guess from the open at least. I've been pretty optimistic on the lean hog market, but I would say we're kind of at a point where it kind of seems like it could be in a holding period, especially with October inching towards expiration. We're a couple weeks removed from that, but with the October contract being front month, I wouldn't be surprised to see that maybe be at a little bit of a standstill. We've been optimistic on the hogs, but if you want to initiate a new position in the long side on hogs, I think you'd probably want to wait and be a little bit patient and wait for a pullback. Conversely, if you want to short this market, I don't know that I would step in front of it either, because these livestock markets have been kind of on a one-way ticket here over the last several months, and I don't know that you want to step in front of the lean hogs here just on fear that you could see some sort of trade like we've seen in the cattle complex over the last several months.
Well, we kind of flipped the script here today. We talked about livestock first, but over on the grain side, a lot of pressure in that corn market here to start out the week. Is this harvest pressure now finally?
I think that's part of it. Friday session, we'll just kind of recap on that. Again, similar to last month's WASDE report, the market had a lot of reason to really see heavy selling pressure, and we actually rallied and made new highs for the move on Friday. So that price action is what we refer to as a fundamental rejection. To me, it says that the market's not really buying what the USDA is selling. Now, we did come back a little bit on today's trade, a little bit of weakness, but all in all, no technical damage was done in today's trade. And we're going to be looking at these moving averages as well as trend line support as must-hold areas going forward. And so that creeping up into the right here, that 420, 422 area is going to be a significant support pocket to hold. If we can kind of do that, I think that keeps the trend of higher lows and higher highs intact. And then we talked about this gap from July 7th, you and I last week. That comes in from 429 3/4 to 432 3/4. Had a high of 430 on Friday, so partially close that. If the bulls want to see another leg higher, we need to see consecutive closes above that gap to really keep the momentum going to the upside.
They're again pointing to the volume on the bottom of that chart. Last Friday, look how the volume spiked on that. Did that mean there was a bunch of new buying coming into the market or what?
I think some new buying and new short covering. And if you're just looking at the volume bars, you could probably guess which days were USDA days. Going back here on August 12th, big volume here. And then again on Friday, big volume there. Typically, you want to see volume confirm price action. High volume on up days, typically a pretty good sign. But again, these are USDA days, so more volume is expected regardless of which way it trades. What we want to see is increased volume on up days post-report, and that should confirm price going forward.
Are you getting any anecdotal reports, harvest reports in the office here?
It's been mixed. We've been talking with a lot of guys all over the country. Some guys say things really aren't looking as great as they maybe were towards the end of July, even beginning of August. A lot of southern rust making an appearance in some areas where they haven't seen it before, which could potentially put a dent in demand, and that's kind of where we're at too, is putting a dent in demand for corn. I think the USDA set the bar really high. I think they had reason to walk it back. In Friday's report, I think they potentially could have walked it back even a little bit more. Where I think the opportunity is for more reduction in yield is potentially in that soybean market. We'll hop over to that chart. No, August was just a really dry month for the central grain belt, and I wouldn't be surprised to see that soybean yield number come in closer to 50 to 51. I think the USDA is still a little bit high there. So that potentially adds a little bit of premium to prices. What we're going to want to see, though, to really get this market moving and get bears nervous and bulls excited is that demand from China. Demand's been pretty decent so far. Export inspections this morning were above the top end of estimates, but what we want to see is China come to the table. Now, the U.S. and China does have trade delegates speaking this week. Hopefully we can get some positive news. It sounds like for now a lot of that conversation is regarding big tech, but potentially if there's positive news on that front, maybe that can spill over to some positive news in the ag side as well.
So just looking over the horizon a little bit, from what I understand, Brazil has already started some early planting, right?
They have started some early planting. That's going to be, that's really the changing of the seasons, how things happen. Potentially, get through harvest here in the States, and then you think that the markets are just going to be like watching paint dry. But no, a lot of the attention focuses on South American weather and crop development down there. So these markets are always on the move one way or another. So it'll be interesting to see how their planting unfolds and how they shape up.
Let's talk about the wheat market. And on the wheat market here on a Monday, it doesn't look like it really accomplished very much either. It's just kind of dragging the bottom of the barrel.
Yeah, the wheat market, for some reason, I am drawn to things that are very underloved, and that is in the commodity sector. That would be the wheat market. We had a fairly bearish report on Friday. World ending stocks remain really, really elevated, but we did have kind of a positive price action, which is encouraging again. And when you zoom out, though the wheat market may seem depressing, we really haven't done anything. It's been mostly sideways to a little bit lower over the last month and a half. We tried to poke out above the 20-day moving average in today's trade. Looks like we closed just above it. We need to see consecutive closes out above there to get us a little bit more excited. But really, above that, you're looking at the top end of the August range, and that's 530 to 535. Above that, and I think that's a real trend change. And you could get market participants a little bit nervous who've been on the short side. Funds have been net short for, I want to say, about 3 years straight. So if we get out above some of those technical barriers, potentially it spurs some short covering on that end. And I think you could potentially see a run towards old support in the breakdown point from the end of July. And that comes in a little bit closer to 550, 555.
Well, if you want an exciting market, I guess you can look at gold. It had quite a day.
Precious metals continued to move up into the right. We are, in overbought territory. The U.S. dollar continues to be a nice little tailwind there for the precious metals. All eyes on the Federal Reserve meeting here on Wednesday. That's going to be Wednesday afternoon. The expectations are for a quarter-point cut. That is basically all but certain. And then I believe the Fed Watch tool from CME Group is also pricing in cuts for, I believe, the next 3 or 4 meetings after this one. So a lot of things getting kind of baked into the cake here, so to speak, propelling metals up into the right. Gold, obviously, making new contract highs yet again in today's trade. And then silver making new highs for the move as well. Not quite contract highs. Those highs were made in 2011, where we were just about, 25 cents away from $50 back then. So hopefully we can continue to see these markets move higher. If you're looking at this from a trading standpoint, it's really, really tough to say this is a spot to buy. I think we go higher over time. But buying after a move like this, really, really tough thing to do. And if you're long, I think it's important to protect your downside risk, especially into that FOMC meeting on Wednesday.
Well, as we wrap this up, how do our viewers get the ability to chat with you guys on your staff directly and talk about the markets, or maybe get access to these cool charts that you've been showing too?
Yeah, so these charts are on our desktop platform, the Blue Line Edge. We also have a very, very user-friendly mobile platform, and this is great for charting. You can also place trades from here, or you can just monitor your open positions or live quotes from the exchange. And then myself and my colleagues put out a lot of great daily content covering a wide variety of commodities, not just the agricultural space, but precious metals, energies, etc. So you can get signed up for a free trial of all of that on BlueLineFutures.com. And if you want to talk to our trade desk, we're always available as well. If the markets are open, we're open. So you can call 312-278-0500.
Awesome. I encourage everybody to do that. Thanks again for the time. I appreciate it, Oliver, and we'll talk with you again on Wednesday. That's Oliver Sloup of Blue Line Futures. We'll catch you next time with Markets on the Move.